I'm trying to explain a strategy for you that uses alligator, RSI, and MACD indicator. I had to find a mic because the last video, I think, of the fractal, this red points, and is the fractal indicator, and these blue arrows, these green and red arrows indicator. So I like 6, so it's showing it didn't appear here because there's no sign of any liquidity here. That was there. Usually liquidity has wicks. So let's get it. So I only use the when I see the fractal. That's when I know for sure they will be set up. Let me find a setup and I'll show you how it works really. Okay. As you can see, this is rest liquidity and it crossed here and it's starting to trend downside. So I'll be looking for sales. What is so that's what I'll just be selling here. It doesn't matter if your trade doesn't enter the first time. What you do next, you put a trade for $3 at least, so that you can make up the last one that you lost. If you lose again, you use your whole account balance because it is already just $5. So you see, I made $2.28 just like that. So now I'll still be risking $1. Well, not here. Let me look for a good currency pair. I like using Tesla sometimes, but Tesla is on 75 payouts. Okay, the resting liquidity. This place is the resting liquidity. This place is the resting liquidity. So liquidity as alone like this, there's nothing at its side, nothing crossed it up. This is called the resting liquidity. So we keep looking for opportunities. Okay. Okay. There is resting liquidity. When I did this, I saw resting liquidity here. When as I shift aside, I saw another one on top of it. So showing that this way it actually started. The move started here. So what I'm trying to do, I'm just trying to catch the decision after the move of resting liquidity. For example, this resting liquidity is the move. You can see how choppy it is. It rested here again. It moved. So this is where I should be taking my trades. Well, it's already that opportunity has passed. It created another resting liquidity. So this is here I'll be taking opportunities here. Okay, this thing is giving me a signal. When all the lines, you see the lines. Oh, I wanted to enter since for a really good how do you call it, point to actually enter a trade. I entered the trade since, but the internet was so slow it didn't apply, and now I might lose it. It's my internet that just delayed it. This is when I'm supposed to enter. If I lose it, I enter $3. Let's try again. No, trading is all about risk management. So you manage your risk. Oh man, hope I didn't enter that out. Let me put my phone on DND. Hey, my mom called me. Let me go and call her. No. Okay, I spoke with her already. So let's continue. I like your my internet. Okay, so I'm entering. Enter with 3. Doing a mistake, but so let's just see what happens. Okay, I enter with 1. I entered already. Okay, this internet is slow. Like, you can see my indicators, they're all trying to point up. This is the 0 line for the MACD here. This middle line where this histogram is. The histogram is not the lines, the colors. This momentum showing here, the red and green momentum, that's the histogram, and it's on a 0 line, a line called 0. So every time the MACD crosses the 0 line to be an uptrend, every time it crosses down to be a downtrend. And also this RSI, it has 50, 70 and 30 level. The 50 level, every time price is below the 50 level, it's a sell signal. Every time price is above the 50 level, it's a buy signal. But every time price passes all the way down to the 30 level, that means market is overbought or close to being oversold or close to being oversold. If it is above the 70s, overbought or close to being overbought, especially if momentum is very. I enter this trade because I see momentum. There's a lot of momentum in the market. Also, I enter. You can see this resting. Go buy here. Liquidity here. So. Go back to our $5. So, opportunity. Let me just see if it's okay or if it's not choppy. Let's me. MACD is trying to cross down, cross the zero line. RSI has already crossed, showing me it's a downtrend signal. But I'm not entering here because anytime you see a push like this, there will always be a pullback before the push continues. So there's no pullback. I'm gonna enter. There was no pullback and it swept liquidity. So I'll just wait. Momentum looks very strong. It is trending below the 70 line. Sometimes if it trends, sometimes it trends below the 70, the 30 line of the RSI or the 70 line of the RSI. So sometimes it will be overbought, but it will still keep moving up or keep moving down. So the momentum is strong like this. Because the momentum was strong, that's why I entered. I knew that the move has finished already, but there was still small momentum in the market and volume, so it's still pushed down. So sometimes it can even go for a very long time. Just took one trade. So watch the market now. The resistance liquidity line crosses the red line. What happened? Why is the network so slow now? I'm just reloading the page. I don't know why the network is slow. Okay. We are back. Okay. Let's see what happened. Market is just trending downwards. It's pulling back up and buy. Because you can see the MACD is trying to cross up, it's crossing the red line, and the RSI too goes down. The 50 level is crossing upwards, showing there's a momentum, there's volume, and you can see the alligator crossed upwards, even though it's very choppy. So It's not advisable to trade in this kind of condition. I just entered because I saw all the confluence. Now, if I was to read this market as a professional, I wouldn't be using these indicators. The indicators just make it easier to do the analysis. Of the indicator, you already know the analysis that it had made for you. For example, now this alligator, something called liquidity sweeps and hitting fair value gaps. For example, now this price here, as you can see, there's liquidity here. And price came and swept it. You can see price came and swept this liquidity, and it made a market structure shift here. This is what we call a market structure shift. It's when market makes a break of structure and sweeps liquidity like this here. This green candle swept here, swept this point here. You get me? So make my broad lights. Let me change the line. Below here again. Just go. Use first. This green first. This long candle. This is the third. This was supposed to be, but the third candle didn't really make a wick up here. So check if sometimes it happens downside. So let's see see this one here. Now in the second movement it happened. So second movement, the sorry, I went somewhere a bit to change the line because it brought light. So this candle here is the first one. So the lower wick of the first candle and the upper wick of the third candle, still it didn't happen here. So still move down and look for where the fair value gap happened. You can't see it. You can't see the fair value gap here. This is the only place it could happen, but it didn't happen. So there's no fair value gap here. So there's no liquidity to sweep upside. So this thing will just keep going down. Just like I predicted. Well, you can use here as the fair value gap, but that's not how it usually happens. If you drag it out, candle makes this space here. See, if it sweeps, what will happen? So fair value gap, the first fair value gap happened after the market structure shift. That region, market will start going very low now. As the market breaks this trend line, I'll sell. Hey, it has broke. I'll start selling. The market usually pulls back up. You can see the alligator indicator is even crossing. Good. The alligator is crossing. the RSI indicator and this thing is also crossing downwards. They're all crossing downwards. I want you to pull back a bit in it before I enter. Just pull back small. It doesn't want to pull back. Pull back more. Let me just enter one more. Yeah. So it has reached this low, the beginning of the trend. That's why it's going back up. If I enter, it doesn't enter fast. It wastes time because of the internet is slow. See, so that's how to catch the trend. I hope you get it. The reason why I'm losing is because my internet is slow. I will have entered the cells quickly, because every time I press it before it enters, it even wastes time. As you can see, it's hooked. I've entered since it has already, the move has finished already. This cell, I entered it since it was here, but it's just now that it's appearing. So because my internet is bad. So that's how the strategy works. So I'll find a good internet and I'll trade this strategy for you on a higher time frame where you can see everything slowly happening. Like on a 1 minute time frame, then with a elapsed time of 3 minutes. But we could just do it right now, safe. Let's do it now. Okay, so let's start trading for real. I'll turn off my mic, and if there's a signal, I'll turn on the mic and I'll say this, and the signal and I'll explain it. Okay. Or let me just explain it as I go, so but I'll focus more on just getting it. So all you need to do is just trade these first 9 currency pairs. Is fine. You don't need to trade anything more than that. There's a signal here. You can see this indicator is trying to cross up the alligator. If the 3 lines crosses up, I'll buy, because this MACD is trying to cross up to this RSI is trying to cross a higher too. So all of them are trying to show me a signal that is about to happen. Take a 3 minute trade. I'll take 1 minute trade because the way the candles are shooting high, they're not pulling back much. Change my location, my position. Let's see if it works. Sometimes it's similar. haven't entered the trade, but we enter now. We enter at 2 minutes. Just 2. The next trade is a 3-minute trade. Because it has gone lower, I'm going to try and buy here, but these candles, these 2 red candles I'm seeing, they're not giving me confirmation of buying here. So I need to see confirmation of a buy here before I buy. Like a week after the tap of this, so I'll buy 1 minute. So I just bought. I bought 1 minute because I know the movement will not be much to continue going down. But because of the confluence of all the indicators together showing a signal higher, that's why I entered the trade. Showing that there's a move upwards, but probably just 1 candle or 2. It's showing a very strong upward movement on the indicators, but the chart is not saying the same thing. Okay. Let's move to the next currency pair. So it's showing me I buy. There's a tab of a fire galuga. They say buy here. I'll put 3 minutes if it happens, because there was a fair value gap here. The fair value gap got tapped, and boom. Now the RSI is giving me a signal that it's trying to go higher. See how it's trying to curve upwards. But you see the MACD. You see the MACD is not giving me a signal. The MACD is actually crossing downwards. The momentum is kind of weak, so that's why I'm hesitant to enter a buy signal here. It's with $2, so okay. It's trying to push upwards, or enter. If I failed, I'll enter for $4. It was only the MACD that was not giving me a signal. Well, the RSI was giving me a signal, the alligator was giving me a signal. So the confirmation of only 2 signals, and this is because it tapped this fair value gap. That's the most important thing. It's for you to do your own analysis. There was liquidity here, it got swiped by this liquidity, it shot upwards, and it created a fair value gap, and price came back to the fair value gap and tapped it. What would price now do? And it created a bullish engulfing pattern. Price will keep going high until it reaches a demand zone. Demand zone is simply a supply zone, is simply the internal liquidity, or is either internal liquidity or a support level or a resistance level. But it's trending, no? Market is trending here downwards. It's a risky trade because it can easily come down because of the trend. Market is trending. Broke the trend. There'll be a lot of juicy opportunities here, unless it's not just liquidity swipes. We start trending on reversing on this trend. I'm still waiting for this trend to end. Well, there's no way I can lose this. It's already 5 seconds. So let me start looking for another opportunity. Resting here. If I lose this one, I'll get the next one, which is $6. If it creates 2 green candles, the third one will be a red one. I learned all from just reading how the market works. So, candle finishes in green, going to sell. Going to sell and even make more money. Are you seeing this? 8, 6, 5, 4, 2, 1. I just sold. I'm just waiting for my time to elapse. I just want this candle to close down, let you know, start shooting upwards. So I entered 1 minute because I know exactly what will happen. Okay, now we are up $12. The goal is to reach $30. So let's go to the next. Again, this one that did. You see what I'm telling you? So supposed to, as it crossed here, it's supposed to touch this trend line, respect it, but no, it came back up. It's trying to do liquidity swipes. We are not there for that one. If in a fair value gap there, I'll enter. Let me mark fair value gap. This liquidity was swiped. Fair value gap. This is a fair value gap. If market goes up, and comes back into this fair value gap, I'll buy. Even now, if it taps this fair value back, oh my god, my internet. I'll buy for $2. If I lose, I'll buy $6. It did not type it. Thank God. You see, this is the fair value gap. It did not enter. You should have entered inside this fair value. If you entered, that's when I'll buy. This is all a trick. All this one a trick. If people are buying here, to come and take them all out, all of them, as it goes up, to come and take all of them out and tap this place before it will start going high. The normal position, unless it's not trying to go high, it's actually going lower. So unless it's actually a downtrend, but if it's an uptrend in a higher time frame, this thing will keep going high, but not like this. It must come back to this line and tap it, unless it has tapped the fair value gap before. Let me see. Liquidity sweep. Use a liquidity sweep. It tapped a fair value gap here. It tapped again here. It just here. It will tap here too. It's respecting it. And I'm going to enter with 3 or 4. If I lose, I'll enter with 8. With the lavish regime. If it creates this candle, let me check back. Is this an interesting point? Point of interest. I'll sell 1 minute. The reason why I sold 1 minute is because I know it to come back into this fair value gap before it continues going higher. That's why I sold 1 minute. So I know there will be a downtrend, down candle that will come back here, red candle that will come back and touch here, and touch this fair value gap. So my next trade will be $8. That is if I lose this one. You see, I'm telling you to come back and tap this fair value gap. If it taps the fair value gap, me come and I'll buy. But if it ignores it and keep going higher, I'll go to another currency pair. I'm buying it here. The reason why I bought here is because of the candles, the way they look like. You can see if a candle is making a wick up and a wick down, wick up, wick down. See the wick up and down, wick up and down. It's a trending market, so the market will just keep going high before it actually comes down. To go high in it for a while. To even shoot high, like do one mad shot before it will start coming down. So I'm looking for that long candle that is trying to make, because to make a very long candle here before it will start coming down. So I'm just trying to chop the opportunity before it comes down, but to definitely come down and tap this point, this line, this fair value gap. So all these now opportunity to just chop 1 minute trades. Okay, $15. So we're halfway. So let's trade with $5. If I lose, I'll put $10. If this thing make hammerhead, I'm selling, no. Because the market is overbought. But let me check. Let me check where price is at. Price is trying to tap it. It has tapped the fair value gap here. There's a fair value gap here that price tapped. So if it makes hammerhead, I'll sell. 1 minute. In fact, I'll start selling now, safe. I'll sell again. I just hope we don't go back to. Let's hope we don't go back to $5 again, no? Because this was a confirmation candle, that's why I entered. If you see this kind of candle patterns, is hammerhead, or it's like a hammer inverse hammerhead. That means if market is overbought, that's when it does that. And when market does that, it usually comes down. And I know this place is like a magnet for the market. This green place, like a magnet for the market to come down. I'm going to increase my position now. I'm going to increase my position here. I'm going all the way in because I know this thing will come down. Okay. My first trade entered as a neutral. I didn't win it nor lose it. I lost the second one. I'm hoping to win this one, this third one, because I know it to come down. So if I win this trade, at least I'll be back up. I'm going to scalp here. This is called scalping. What I just did, the remaining time that is remaining, I'm trading the remaining time. I didn't even trade it well, safe. I'll scalp 15 seconds. See, I traded 15 seconds here. Because I know the market will go down for 15 seconds at least. Because do it aligned like this. You see? So if you see opportunity, take it to. Don't wait. Come on, this trade is supposed to enter now. We're already close to 30 safe. I'll still scalp 5 seconds here. That's it. We're done. $30 up. So what a beautiful, beautiful session. Beautiful. Even though it's a demo account, you still have to keep using the demo account and treat it as a real account, so that even if we use the real account, it will still be the same mentality. So that's how you do it. Have the same fear you have when you are trading. Even a demo account, treat it as a real account. That's the only way you succeed. So this is all for today. Market is still going to come and touch this, so we've reached our goal, so there's no point now. Okay, don't forget to like and subscribe. Peace.